Good morning. Had to restart my computer, so good morning. Had to restart my computer, so Murphy's Law happened today. Finally happened. Or like right before the stream, everything started crashing and glitching out on me. So now I get to on live, start up my systems again.
Good morning. How are you?
I'm good, bud. How are you?
Yeah, I'm good. I'm good.
But today is more of an educational one because people want to know how to use this 5/9 box. So we'll definitely go over that.
Good stuff.
All right, let me set this up. Of course, I was working on stuff before, and none of it saved on TradingView. So that needs to be 7:30. All right. Let me share my screen real quick. $8:30 and 0.
Are you meant to be sharing right now?
So what?
Are you meant to be sharing at this moment? We can't see anything.
Yeah, I'm going to in like 2 seconds.
Yeah. Okay, no worries.
Okay. All right, let's do this. Okay. So I've mentioned to you guys that every single 15-minute, every single hour, every single thing that you see on these candlesticks have a probability, right? And our job as traders is to identify the probability and line it up with live price, right?
Yeah.
Because using statistics and probability is nothing new, right? Like people in the equity space, they've been doing it for years with company fundamentals. They've been doing it with realized volatility versus implied volatility. You know, for equities, people within the options space have been using statistics and historical data for years when it comes to harvesting risk premium. Economists have been doing it with economic data for decades and decades, right? Not many people have done it from an intraday scale or from a time horizon that we've done it, right? The DR community has done it, and that's about it, right? However, a lot of the traders who trade the future markets, the ones who are, truly successful, there's a lady on Top Step who's been trading for 30 years and ended up on the markets wizards. A lot of the professional traders will tell you that do trade intraday and they trade their own portfolio or they trade for clients will tell you, like, your job is to make it as simple as possible, follow a workflow system, and quantify your work, right? Have it as mechanical as possible. You know, there's going to have to be a component of discretionary,
Sure.
right? There has to be a live price that aligns that historical data, though. Because if you just trade purely historical data, you have no real reason to be clicking the button now. If you're going to trade purely historical data, you know, you have to, like, why have the error of over leveraging, making mistakes, changing the variables? Because every time you make a decision outside of, that historical data and that statistical trading, right, you've just messed up the probabilities. Why jeopardize that if you're going to be just a pure historical trader that trades nothing but statistics? Why not just code it up and have a trading robot do it for you? Like, you'd be better off long term, right?
Yeah.
So there has to be a live price component to it, right? So looking at my chart, and this is just a simple example, right? We know that this is from 9 o'clock to 1600. This red box is from 9 o'clock to 1600.
Yeah.
And let me turn off one of the sessions. There we go. Okay. And this is from 1845 to 2045. This is from 2300 to 01. This is from 445 to 09, right? These are high probability retracements throughout the day, right?
Okay.
We know that the least likely time to capture, like for retracements, are going to be from the 9 to the 1600, because that's typically when the market trends in a direction.
Yeah.
Right. So our job is just knowing that historical data, that fact right there, right, is the data scalp, the data around what usually gets retraced to, right? And we've given you it on the weekly review on that Twitter space. We told you guys to go look up the edge of how many times 1930 to 2030 was retraced to. And if you did that homework assignment, like, you'd realize instantly that's edge right there,
Yeah.
right? Now your job is to build the risk profile of that edge, because that's a historical data component, like 1930 to 2030. Once it breaks out of one side of it, it returns to the other side of it by 1600 the next day. Your job is to now build a risk profile that can capture that edge without being too expensive, right?
Yes.
And so that's this first orange box right here, right here, right
Yeah.
here,
Yeah.
right here, right, right here, right? All these orange boxes, right? And let me turn off this one orange box real quick.
I just want to get rid of this cat.
Yeah, we'll leave it on.
Yeah.
So that edge is there. The midnight retracement is another high probability edge that Austin Clark gave you. He said between 8 to 12, we typically retrace towards that midnight price, which is the second orange box that you here see right here, right here, right here, right here, and so forth and so forth.
Yeah.
So your job, if we know that the 1930 to 2030 has edge of being returned to, and the midnight price has edge towards being going towards to, then our job is to figure out, number one, when to trade it.
Yeah.
And number two, what the risk profile is to not destroy our accounts, right? And so every single morning, me and Costa jump on here and we do our highest probable trade setup of the day and we project forward. And that's not necessarily, we're very detailed and repeatable about our steps that we take. And that might be too complex for some, but that's okay. Like, it's not that hard. The hardest thing is collecting the data around that edge, right?
Yeah.
So so if I wanted to trade this 1930 or 2030, right? Just purely off of a statistical edge, like I would tailor simplify rules around it, saying once this criteria is met, and I'm not going to go into the details of that because that's what we do in the pack trade group. We actually build the risk profiles and the steps of that, you know. So if you want access to how to trade that edge or how to trade the midnight snap edge in a more advanced way, you know, like you got to be part of the pack trade group, right? But you don't have to be part of the pack trade group to sit there on a napkin and write out criterias and then go test it and build a risk profile around it, right?
Yeah.
You can see clear as day these two orange boxes, the Asia and the midnight, right? We trade to it, we trade to it, right? We trade towards it, right? Your job now is to incorporate some kind of function, like on this day, right? When we didn't even come close to returning to it, that turns it completely off, right? And that's where the live price function comes into it, right?
Yeah.
So whether you use yesterday's, which I think I can retrace back to it, like we got off here around 6:30.
Mm.
So let's rewind to 6:30. Tuesday 6:30. Okay. And what we had come up with was this possible scenario.
Yeah.
Right? This was our time-based projections, our structure-based projections, our time-based probabilities, our structure-based probabilities, and our projection-based probabilities, along with the average daily range. And at this point, we knew that this would be how it would look. And the only part that we were unsure of was this 12 to 1600 distribution, because price hadn't shown its hand enough to confirm where that was going. And we said we were going to wait to see if we could get back above this London over underline, right? And then when the 930 to 1030 were opening up, we were going to track the midpoint as it developed, right?
Yeah.
And so now we have the live price right here on our left-hand screen. However you want to do it, I usually have it on a 15-minute, right? I build it out on a 5-minute, but have it on a 15-minute. Because honestly, the 15-minute is the most ideal time frame throughout the day, right? Because for me, it balances out the actual trend, which we know that happens during 9 o'clock to 1600, right? And then it keeps me on the right side of my thought process. Because if you go do the data collection that I told you guys you should do, where you take every 15-minute bar, and if it breaks out one side, what is the probability of it reaching the other side of that by the end of the day, right? You would notice that from 9 o'clock to 1600, it's literally low probabilities for that to happen, right? So your job is to follow the wave for you discretionary traders of that 15-minute bar, like which one gets breached to after like 9:30, 9:45, even 10 o'clock. Like I tell a lot of young traders, I have done a room before that taught how to trade the 9:30. But I told a lot of them, your best bet in these markets is to trade just captain backtest. Use captain backtest is a trend-based, system that I built. that captures that daily trend from 10 o'clock to 1600. And, because we know that from 9:30 to 1600, it's more likely to go be one directional than to be back and forth, right? So we built, so this is where we were yesterday, and
Yeah.
now the 5-9 box, right, and we should be on the 1 minute, has told us that we consolidate it because let's turn the midlines a different color. Let's make them orange so they stand out.
Yeah.
Make them a little bit bigger. I'm obnoxious like that.
Not pink.
Yeah, yeah. Yeah, not Barbie doll pink. But what we had saw was that we were in a range for most of the night, like we typically are. This is the top of the range right around here. This is the bottom of the range right around here. And like if we drew a 4-hour midline between the 2200 to the 02 to the 02 to the 06, like it would be somewhere right around here. We saw that the reversal of the range happen, and then we got below the 5-9 box, previous hour mid, and then shredded off, right?
Mm.
So at this point, we're just trying to determine, right? Are we going back into the range? Well, right now, at the beginning at 7 o'clock, yes, right? Because look how flat the midlines are. We got below the, and here's another way you can see if you're in the range. If the 5-9 box is up, then down, then up, this isn't rocket science, right? We're just using the minute 5 to the minute 9 as a box and the previous hour midpoint as a determination of what kind of market condition we're in. Because remember, right, you have three types of phases that the market moves in. It moves in ranges where, you know, most people will say is efficient market theory or whatever they want to call it, right? But buyers and sellers are meeting at a good point where you buy low, they sell high, that you buy low, right? It's consolidating, it's ranging, it's building value, right? It's building a market within that time period. And when you're consolidating, that's when time, volume, and price agrees with where price should be, right? So that's the first phase of the market, right? And when you're in that, remember we're building risk profiles of what kind of trader we should be in that, right? And the kind of trader that we should be in a ranging market, once we identify that we're in a ranging market using the midlines and the 5-9 boxes, right, is a type that says, I'm going to, in all of these scenarios, we're going to say we have 10 micro contracts that we have to exploit capital towards, right? In a range of market and consolidated market, in a market where we're building value, where time, price, and volume agrees, right? We know that like we want to trade that range within the higher time frame probability. So in this case, right, we know that we don't want to necessarily be a seller here. We want to be a buyer here. And yes, I know how price ended up yesterday, but why? Because we know that we have all the probabilities.
Mm-hmm.
We have all the probabilities pointing a retracement back up to that 1800 or that midnight that we talked about earlier in this stream.
Yeah.
We know that that edge is there, right? And we know that we're in a range. So we want to buy 10 micros, buy 10 micros, buy 10 micros, whatever, right? And we want to shoot for low hanging fruit because we are in a range, right? So previous hour midpoint, previous hour high, right? And then that's what a consolidation is, and that's how you use the 5-9 box in the previous hour mid. Most people will wrap their mindset around, at least the inexperienced traders will wrap their mind around, the 5-9 box, and they'll completely ignore the previous hour mid line, which is like the real juicy stuff because that tells you that previous hour mid is telling you what kind of market you're in, right? You were not in a range of market until this hour. So from 6 to 7, from 5 to 6, you're still in a trending market. Why? Because we're below previous hour mid and we're below the 5-9 box. So all of this you have not identified as you were in a trending market. I mean, in a range of market. You're still in a trending market. So you expect the 6 o'clock to the 7 o'clock hour, this hour, to open up, stay below this previous hour mid, and get below the 5-9 box to continue on.
Yeah.
The clue here is to tell you that you're in a range of market first happened when we stepped above the 5-9 box and found support. And then we kept doing that over and over, but we couldn't break out and take out the previous hour. So momentum wasn't shifting back up. This was clear indication that you were in a consolidation range of market, right? So now, as price goes on, we know that there's another. So that is consolidation ranging, building a value area, whatever you want to call it, right? We know that there's a reverse, and we know in a range of market, right? We want to buy low or sell high, right? In that market and shoot for low hanging fruit. We should be, if we're engaging with 10 micro contracts, we engage with them all at once. We're not DCAing into a loser. We're not DCAing into a trend, right? There's no trade management. It's like you buy all 10 right here, you place your stop at the bottom of the range, and you shoot for the low hanging fruit within that consolidation. That's the trade management, right, of that trade. You don't sit here and move your stops. Your stop stays, because at this point, the type of trader you are is the one that says, this is my invalidation zone.
Yeah.
And I'm placing my stop where my thesis, which my thesis is that we're in a range, is wrong. So you place your stop at the bottom of that range, whatever it might look like, right? And you don't move it. There's no trailing your stop. There's nothing like that. It's all or nothing. That's the type of trader and risk profile you should have in a range of market, right? So in this case, once we stepped above the 5-9 box and found support on it, and stepped above and found support on it, we knew we should have been a buyer targeting this previous hour high right here, and our stop should be right below that 5-9 box. All right, we have reversals, right? Right. This is okay. So this is a higher time frame, right? View, and the reversals are hard, right? Because you don't know that you're in a reversal until you get this kind of move right here, right? Which is why you again, right? You pull from a higher time frame probability, right? In this case, we can say it was between that 18 and 1900 period during Asia that we know has a high probability of retracement, right? We reached that, whatever it might be, and we're expecting a reversal, right? So for this to be a reversal, first step on hour 4 o'clock in the morning is we need to get below previous hour midpoint, right? Before I start trading a reversal, that's the criteria I have, right?
Yeah.
Unless I have a really high probability, which is 85% or higher, that say I have to hit this level right here before I start selling blindly into it, right? So now we start thinking, let me go to micro. So now, let's say this line right here is the other side of the 1930 to 2030. And we saw that we crossed over it and got immediate response, right? And let's say we wanted to jump the gun and start trading this reversal, right? Right? We know we want to like start with a fourth of our size because we need to give ourselves an allowance, for this to continue going up, right? Because if we're trading a reversal, you're not going to shoot all your shot at once, and you're not going to have a tight stop loss where your invalidation point is, right? You're going to give yourself a cost allowance because your job in a reversal is not to get shaken out, right? So we're going to sell 2 right there, and we're going to give ourselves, let's say this is a 50K account, we'll give ourselves a $750 allowance, because, right, I'm not going to ever let it get to this point without making a decision. Like, it's going to take hours for me to get up there,
Yeah.
and it's going to get confirmed by the market condition that the live price is telling me, right?
Yeah.
So for this to be a proper reversal area where I'm ready to DCA into my losers, right, to pull my cost average up, so when it does negotiate the tipping point of this high probability and shift the market, right, I'm still in that trade, and I didn't have to sit here and short here, place my stop here and get stopped out, short here, place my stop right here and get stopped out, and so forth, right? And so now what has to happen is I have to get below previous hour mid because it's a new hour. This is the previous hour midpoint. All right. We have not gotten below that previous hour midpoint, and now we're starting a new 5-9 box. So the first criteria is getting below the 5-9 box and previous hour mid to confirm this is a reversal. If it's not, then guess what? I'm going to continue to DCA using entry criteria, aka the 5-9 boxes for each hour is my entry criteria. Austin Clark uses these entry wolves, which is based off the distribution, kurtosis,
Yeah.
which is the rate of change. All it is a sign of displacement using, whatever formula he uses. Quantum flow uses these quantum flow boxes right here as an area to enter off of. None of us are making decisions off of our entry. That's just like, all right, we had a high probability area that we engaged with. I'm trading towards the reversal, so I use the 5-9 boxes, right? So now, right, the 5-9 boxes have shown me nothing but, like, we can't get below them, we can't get below previous hour mid, so I'm just sitting on my hands, right? So now the 5-9 box for this hour is developed, but we're still above previous hour mid. This thing can continue to shoot up.
Yeah.
So before I add any more into my position, that criteria has to happen. So now we're starting to see rejection off of minute 9 right here, which is this red dotted line right here. And now we're starting to give up 5-9 box, and now we're below. We breached the previous hour mid, and now we're stepping below and finding rejection of the 5-9 box. We already started showing rejection of minute 9 in the midpoint of the 5-9 box right here.
Yeah.
Now we're starting to breach and meet the criteria of a proper reversal, right? So you can sell like 2 more right there, right? But preferably when you're doing a reversal, the reversal turns into a trend, right? For me, the reversal turns into a trend, right? So I'm not in any shape or form in a rush to get rid of my 10 micro contracts, right? Because I know what comes after this. If this is a true reversal and it's 5 o'clock in the morning or 4 o'clock in the morning, right? I know that I'm trying to capture the daily distribution, right? Because there's one good move that happens every single day. And your job is to align with it and have systems for that, right? So, right there, we found rejection again on the midpoint of the 5-9 box, and now we're below previous hour mid. There's nothing else for me to do for this hour at all, right? So it is 4:25, and my job is to just sit on my hands and confirm this reversal that I think is going to happen, right?
Yeah.
So I go live my life. I don't care what price does, right? If it continues up, guess what? I'm going to use the next hour anyway, 5-9 box to DCA into. If it goes down, cool. Now I'm going to transition into a trend style, a trader, right?
Yeah.
All right, so next hour opens, right? Can we get back above previous hour midpoint? Can we get below the 5-9 box that appears on this arrow. And we already talked about how to be a range style trader.
Yeah.
Right now, 5-9 box is developed right here, and now I just pay attention to price. Can we get back above previous hour mid? We've already taken out previous hour low, same momentum is still shifting to the downside. And we rejected the 5-9 box, right? And I missed the entry, which is fine. I don't care, right? We already know that this turns into a ranging market. Well, not really. Right here, do you see what I'm saying? When we were looking at the range for this 2-hour period, we already knew that, like, this is what we already said, like, hey, guess what? This is a trending market. And during the statistics yesterday, right, we said for us to get back into a long bias thought process, we had to get back above this London OU line.
Yeah.
Right? Which is at 604. 604 is up there.
Yeah.
Right? All statistics told us was to think downward, right?
Yeah.
So we're safe in our position right here. We have nothing to worry about, right? So now we're trend-based traders, right? So we went from a reversal-based trader to now thinking about being a trend-based trader, right? And I'll do that because remember we have 10 micros to engage with for the whole day, right? So now as we come up to test this, like I see that we're not testing the 5-9 box low, the mid, or the high. So I don't need to engage with price, right? I can wait for the next hour 5-9 box to develop and make those decisions there.
Yes.
Right? So now new hour opens up. Are we above or below the previous hour midpoint? We're below it. So we're still in this trend, right? Have we taken out lows or highs? Has momentum shifted? Nothing. Have we developed a 5-9 box? Nope. We sit on our hands and let the market conditions develop. We set the conditions for our success to make proper decisions at the proper time. So now we rejected the previous hour midpoint right here.
Yeah.
And for some reason, my 5-9 box didn't develop. Oh, there it goes. Yeah, it didn't develop. What hour is this? 6 to 8. So yeah, it should have developed. Oh well. I don't know why it didn't appear. It's weird. But now
I got it on my chart. Yeah.
5.
Yeah.
To 9. Glitchy ass script. So now we're above previous hour midpoint and we're above the 5-9 box. Was there a probability here for reversal? Yeah, we had yesterday's settlement. We had yesterday's settlement within the area of this possible reversal. Is it going to flush me out of this position? No. Right? Because we still have these probabilities. This one that has a 77%, this one that has a 63%. This is just saying that, remember that 4 to 8 range that we built?
Yeah.
That was at 0.45. At this point, we've almost doubled that. So I expect some retracement.
Yeah.
Right? Before the 8 o'clock opens up and does what it's supposed to do. And remember, we have that 8 o'clock to midnight, that 8 to 12 retracement at midnight that we have to facilitate for as well. So we expect for this position to capture some heat, which is okay. right? The markets don't move straight up and down. If they did, that would say that orders don't break during the trade process and that we move in a linear function, right? So we sit on our hands, we're getting rejections off of the midline. The cool thing about these 5-9 boxes is it forces you to pay attention to the details and pay attention to what live price does,
Yeah.
right? You can trim some of this position off that you got on the reversal. But here's the problem with doing that kind of stuff. You got hella good price. Why compromise it? Right? Especially for this time of the day. Right? If this was 1500, I would understand trim this position. If this was 1300, I'd say, and you've been in this trade all day, trim some of the position. But it's early in the day.
Yeah.
We already know that 9 to 1600 is when the trend of the day happens. These red boxes, we're either going to trend or we're going to sit here and reverse everything. We're going to trend. We're going to, that's a bullshit trend. We're going to trend or we're going to sit here and shop. And it'll be obvious when that 9:30 comes which one we're going to do. We're going to trend. We're going to do a V shape. We're going to trend. We're going to trend. We're going to trend. Or we're going to do inverse V shape. We're going to trend. Or we're going to sit there and do letters, right? So there's no sense jeopardizing your pricing all because you know that we're going to get some retracement at 8 o'clock that's going to retrace back to the midnight. Right? So we sit on our hands and because remember, we have 10 micros. We still have 6 more to engage for the day. Right?
Yeah.
All right. So now we sit here and we let price do whatever the hell it wants, right? Right? We know we're going to retrace at 8 o'clock. This is retracement. New hour open. What have we done? We got below the previous hour mid. We're already identified that we're in a consolidation range value area market, right? Whatever religion you follow calls it something different. And so we know this is just the market that we're given right now, and we're going to have to just sit on our hands and not make decisions around it. At the most we can do is remember we can trade a range bound market. We can add to our positions at the top here if we have probabilities like we did yesterday, which has 65%, 70%, 63%, right? We can add 1 to 2 contracts to that, but that's not what I'm teaching, right? Because I want you guys to understand the general concept first before we get into more advanced stuff, right? 5-9 box is developed, right? And now we're just doing the zigzag. Our previous hour mids are pretty much in a line. We know that we're in a range base. There's no reason to stress out about anything.
Yeah.
We're stepping above the 5-9 box, finding support on it. Stepping above it, finding support on it. New hour opens, right? It's the 8 o'clock hour. We expect that retracement to that midnight right here, right? We're facilitating that. We expect that, right? We know we have all day. We found complete support over the previous hour midpoint. And now we just need to get back above this 5-9 box, and that will tell us that we're getting out of a trend. There's a possibility that we're getting out of this trend or range-based market, right? Stepping above the 5-9 box, finding support on it, finding support on the previous hour mid, took out the previous hour high, momentum is shifting up, right? We already knew that.
Yeah.
We found that stat at 5 o'clock in the morning yesterday.
Yeah.
Right? We're defending this pricing because this pricing is going to help you throughout the day, right? And then what happens, right? We're still stepping above, finding support, stepping above, right? There's nothing to do, right? And then we lose all of it. right? We lose the 5-9 box. We lose previous hour mid, right? And we're about to start a new hour, and we're going to start the new hour below the previous hour midpoint, right? So now we have to think to ourselves, if every hour has an open, high, low, close, and this hour looks like this, right? Was this just the MAE for the MFE to happen, and then for us to continue up at the 9 o'clock, whatever, right? Like we're thinking that way. We're not thinking that we should be adding to our trend right now. If you're a range-based trader, you just got 4 hours worth of trading in, right? We're trying to employ 10 micro contracts, and we call it the reversal up here, right? And we get 6 more, so we're just trying to find the most obvious place to add more contracts to, right? So new hour opens, we're below the previous hour midpoint, and we're waiting for the 5-9 box to develop.
Yeah.
Right now, and remember what we talked about in yesterday's show, right? For me to think longs only, I have to get above this London OU line because that's when the sessions, the Asia, the London, and the New York markets shift, right? And
Yeah.
then as the 9:30 to 10:30 range develops that we had projected right here, we
Yeah.
said clearly we're going to pay attention to our relationship and that hourly midpoint at the midpoint of that range to make decisions to see if the momentum has shifted. So there's nothing to do right now.
Would
And
you?
this is the part that really messes traders up is when they don't realize there's more times when there's not a decision to be made than there are times where a decision needs to be made. What was it? What was that?
Yeah. So as we're moving into that 9:30 to 10:30 period, would you draw your own box over that so you can actually see where that mid is and kind of,
Yes.
yeah,
So now we know that we're starting to enter the time where the New York session is going to trend in a direction, or it's going to do a V shape. But at the very little, the next couple hours are going to trend, and the highest probable time for the reversal in New York is between 11 and 12, or 11 and 1300, right? So we got plenty of hours to still make decisions, right? And we know we're going to get a burst of volatility, right? Before 9:30 opens up, what did I notice? I noticed that we're below the 5-9 box. And if you study these 5-9 boxes enough, you're going to know what hour does what in the 5-9 box. I know that for the 9:30 open, like we like to be below or above it to go the other direction,
right. Yeah.
right? So now, before the market opens, we've done swiped through it. So now we're above it. We're still below previous hour mid. We took out previous hour low. Momentum is shifting down, and we're above the 5-9 box. So this might be an area for me to add to,
Mm.
right? If I see proper rejection. But because I'm a seller, I have to wait for the obvious clue of do we reject this previous hour mid? Do we get back below the 5-9 box and find rejection from it, right? I'm not going to be selling this up here, right? Because I'm not trading for a reversal. I'm in a trend, and I'm trying to fight my way out of this consolidation for continuation trend at 9:30, right? So there's a first rejection of the previous hour mid, and then we're stepping above it, and we reject it instantly. We're coming down. Market has not opened up yet, and so now market has opened up right at the 5-9 box, and I'm waiting for the market to tell me the clue. There's the clue,
Yeah.
right? Because this time of the day, I might have just missed my ability to enter, right? But that's okay. I've
Yeah.
got all these other 5-9 boxes throughout the day that I can find entry on. I might give up some price, whatever. I don't care. And yeah, like I'm not going to be able to enter on this one. Opening up a new hour. Now we have to shift to a trend trader entry style. So remember I told you these 5-9 boxes help you identify Reversals, when you have a high probability area, a higher time frame, higher probability area, you can DCA into a loser. You have consolidation ranges, or if you find yourself in that and you want to trade, you need to be buying the low end of the range or selling the high end of the range, but it needs to be drawing. So like in this case, I told you, if you're going to be a range trader in this, you should be taking longs only, because the higher time frame probability was midnight, and the other side of the Asia range, right? So when it decides to break out, you're online with a higher probability. This is a day where you would have got stopped out. It happens. Don't worry about it, right? But now we have to trade as if we're in a trend, because we are in a trend, right? Which means I'm waiting for previous hour rejections and to get below the 5-9 box, and when it comes back to the 5-9 box, add into my position.
Yeah.
Right? And this way, proper decision making is had. Why is my 5-9 box not drawing stuff? It's because I'm in replay mode. There we go. All right, we're below previous hour mid. We took out previous hour low. We're shifting. And guess what? I told you the New York market is more likely to trend than it is the reverse. Right? So our job is to find those clues, like Captain Backtest triggered right here. Right? So now I have another system telling me we just started the trend. Do not take longs. Continue to add into this short right here. Right? 5-9 boxes develop. How many is this? Just kidding. It's now developed. Now it's developed, right? We're below previous hour mid. We took out previous hour low, right? So we have all the clues that tell us we're continuing trend, and your job is to trade, add to that short within us giving up this 5-9 box, and either at the low, the midpoint, or the high of this, right? We step below it, and now we're waiting for support, right? Like, let's see, I think this hour I didn't add. Yeah, right there. Right there. Like, at this point, you've been in a position for almost 8 hours, and you had to sit on your hands and not make decisions for 6 of those hours. That's welcome to trading.
Yeah.
Now you can add, because we're in a trending market, we've got all the clues that told us that we're in a trend. We can sell into this rejection, or we can wait for the previous hour, or the midpoint, or the high. Like, if you want to get stingy with it, right, and wait, it's still beneficial to add at least one more, right? And then if it continues up, you can sell into that rejection, right? So you can sell the other one right there, right? And then you continue to trend down, and there's no more decisions to be made. There's absolutely no more decisions to be made, right? Until the next hour. You see how boring this is? You sit on your hands more than you don't, right? And then when you look at your chart to tell you what New York is, right, you can see right here that we'll start. I don't think this is updating. Yeah, this is an update. We're still at 4 o'clock on this one. Actually, this is Tuesday, so you're right here in the game, right? Actually, you're right here in the game. Yeah, you're right here in this game, right? So you're right now. You're approaching the 11 o'clock to the 12 o'clock hour, where if we're going to the 11 o'clock to 1300 hour, where if we're going to reverse and do a V shape for New York, like we do here, here, right? Kind of here, kind of here. These have been shitty days, right? Like, it's going to happen, right? So now, one thing I want to bring up to your attention, when we did yesterday's stuff, we had this being the low of the day scenario, right? We've already hit our average daily range. We already talked about during that session, this Asia being the high of the day, right? We said and that's the one thing I need to bring up, right? Where's 930 at? 930 is here. So up until 930, our decision point was could momentum shift this back up to the London OU line,
Yeah.
right? And then we said once 930 kicks off, we're going to be tracking the midline of that range, right?
Yeah.
And if we can breach above that, then we might want to get out of any position that we're in, right? So let's say right here is 942. This is the midline of it. All right, let's make that Barbie doll pink so we can see it. Nope, nope, nope. We're not doing that. We're doing this one. Let's make it solid, right?
Yeah.
And as all the way until 1030, you just track this, right? So as price continues going down, you draw the box, and you can see clear as day, we haven't ever jeopardized this midline right here for the 930 to 1030 range, right? We haven't come close to jeopardizing it, although we've hit our low of the day scenario from a projection base, right? We're still in a trending condition. You guys have no reason to sit here and try to long this, right? We couldn't even get back above previous hour midpoint or the 930 to 1030 midpoint. We couldn't get back above previous hour mid.
Yeah.
We can't get above the 5-9 entry box. There's no reason, and it hurts. It hurts, right? When you just want to buy this thing because it is in discount, as the ICT traders like to call it. It is high probability retracements, as most people like to call it. Remember, this is live. This is our historical data chart right here. To successfully trade historical data, you have to incorporate the live price component. Because if you're just going to be a historical based trader, code a fucking computer to trade it for you, right? All right. So now, right, we're still in a trend. Guess what? Our low of the day. Remember and yesterday I forgot to do this, right? I usually have a green low of the day zone right here, right? So this would have been low of the day, right? Well, guess what? Just like we've seen so many times on this show since I've started it, right? It got wiped out instantly. My job is to sit there and trade the live price and say, guess what? We hit the average daily range already, 340 handles. It's not respecting it. Guess what? We hit all of our high probability targets to the downside. It's not respecting that. We can't even get, for the love of God, at no point, right, could we even get above the 930 to 1030 midline. So why in the fuck would I be, and we can't get above the previous hour midpoint, and we can't get above the current hour's 5-9 box. Why in the fuck are you trying to go long? Because you're greedy, you're stupid, you're inexperienced, or you just are just, you got to fight that urge. Guess what? When you're on the battlefield or when you're getting shot at, the first instinct for most people is to run away and hide. Does that solve the problem? No. You have to do the hard right over the easy wrong and shoot back and find cover, right? The first thing a kid does when they injure themselves is they cry. Does that fix the problem? No, it does not. What fixes the problem? Fixing the injury,
Right.
cleaning up the wound, putting cream on it, whatever, right? It's no different than what people do in trading when they try to long this, right? The system I'm showing you right now is telling you, guess what? Right? We're not going to consider these targets up here. These were upside targets, right? But before 930, we had to breach this London OU line. After 930 to 1030, we had to breach the midpoint, and we had to use our live price component, previous hour mid, 5-9 box, to confirm that we were going to respect that. So your job is the live price is telling you, And right now, we know that there's three types of markets, right? We said that the reversal was going to happen here because of the 1930 to 2030 probability during that time frame. And guess what? Live price confirmed it by getting below the previous 5-9 box, previous hour mid, right? We sold into that. They said we were in a range-based market here. We're already in a position, so there's no sense trading longs the higher probability midnight right here. Then we continue trend. So our job is saying we got best position here. We added to that position here, and our job is to protect our pricing, not try to get discounted pricing, especially when we have all the probabilities from 1800 yesterday to now, and we're in the part of the day where it says we're more likely to trend than we are to reverse.
Yes.
Right? So now it is going on the 11 o'clock hour. We haven't had to make a decision since here. We had to sit and just go do something else. Right? Don't look at the markets. Just know you're in position. Who cares? Right? Now we're starting to get to the point where it might become wise to. I'm going to save that comment because we're not there yet. All right. So right now, new hour opens. Are we below previous hour mid? Yes, we are. Did the market give you an instant clue? We take out previous hour low. Same momentum is still to the downside.
Yeah.
Soup traders, ICT, reversal traders could say that this is a soup, but for this to be a proper soup, we know that number one, it's against the H4 momentum, right? So is this a high likelihood of a soup at 11 o'clock when the H4 just had momentum going to the downside? No, it's not, right? So this might be an hourly soup or stop hunt or whatever fresh flush scenario, right? But can we get back above this hour previous? So if this is an hourly soup, our target is this previous hour midpoint. If you're a long trader and you have to go long, right? We get above previous 5-9. We get above the 5-9 box, right? But are we still below the previous hour midpoint? Stepped above it, finding support on it. We're just swiping, and we're below it. Now, did we take out previous hour low? Are we below previous hour midpoint? We have 10 micros to engage with. We can sell a couple more, right? Because the clues were there. They say, hey, you're still in a trending market. And now we're in the time of the day where, remember, I told you,
Yeah.
right? New York's going to either trend or do a V shape. New York's going to trend or do a V shape, trend, V shape, right? This is the time where it's going to show its hand, right? At 12 o'clock hour, and it'll be confirmed by the 1300 hour.
Yeah.
So now we sit on our hands. We got the opportunity to sell into this, right? Because a step below, we are below previous hour mid. We got took out the previous hour low, saying that momentum is still to the downside. Now, I don't engage with any contracts between 12 and 1300 because I know that that's a high probability reversal time for the New York session. I just wait for 1300 hour and the 1400 hour, right?
Okay.
And now we know how this works out, right?
Yeah.
Right. So let's fast forward it, and we had 10 micros to, display. So let's get rid of our last 10. Oh, we'll get rid of our last 10 at the 1400 to see if the afternoon is going to continue the trend or is it going to reverse, right? We go into our range bound market. No decisions are needed to be made. 1400 opens up, right? Instantly, it takes out previous H4 lows, right? And, showing that momentum is shifted, right? Are we below previous hour mid? Yes, we are. Are we below the low? Yes, we are. We wait for the 5-9 box to develop. Why the fuck is it not showing this one out now? Okay. Okay, I'm going to manually draw it in then.
I'm actually running through it as you are. I can see it there, so yeah.
Right, so now we're below previous hour mid. We've taken out previous H4, H1, M30, M15 low right here. And now we're going to look to add our last two contracts for our 10 micros here in the continuation trend, because this is saying the rest of the day is going to be a continued trend down, right? So for the next 2 hours, we're going to continue trend down, and then we're going to start selling. We're going to start lifting some of our positions, right? We need to get below the 5-9 box and find resistance, right? I'm going to sell the last two right here. We successfully sold our 10 micros, right, for the day, right? And, you know, we're going to start offloading some of them in the 1500 hour. We can start offloading them right now, right? It doesn't matter, right? But we need to start considering, right, what's going to happen during the power hour, right? All right, so now the power hour is here. We've got serious rejection from the 5-9 box. We're still below previous hour mid, right? We need to let the 5-9 box develop for this and play it. What do you see right there?
Rejection in the mid.
Rejection in the mid. 5-9 box. Why is, I don't understand. I guess it's just replay mode.
Yeah.
Right, there's your 5-9 box for this hour. Now our job is to offload all at once because of the time of day it is, right? If I was trying to offload because I got reversed at like 12 o'clock or at an earlier point of the day, then I would like scale out of these positions. But because it's 1500, like I'm gonna offload them all right here, right? Just
Yeah.
go right here, right? Because my job is to get out of the position because
Have
it's the
you,
last hour of the day.
have you at that point altered your stop to not give to, if you've made the decision, I'm getting out at the low of
Remember,
that?
I don't care about my stop. My
Fair enough.
stop is it can be wherever the fuck it's at, right? Like
Right.
I know that I'm in the highest probability. Remember, the stats tell us that from 9:30 to 10:30, right? Or 9:30 to 1600, we're more likely to trend than we're not, right? So my job is to wait for proper reversals before I get out of move my stop or anything, right? Or move out of any of these positions. Like I have to see a proper reversal using these previous hour mid 5-9 boxes and highs, right? So like the hour has to take out this hour high. We have to be above the previous hour mid, and we have to be stepping above and finding support on the 5-9 box
Yes.
before I even consider like exiting any of these positions. My stop is just like in case like a news event happens and it says, "Hey, we're going to take all the interest rates to zero," and this market just rips, right?
Yeah.
And then I'm okay with that,
Yeah.
right? Like I don't
And
care about like that kind of stuff, right? Because I'm making, there we go, we're stopped out,
yeah,
right? We properly caught a proper trend day. We had,
brilliant.
it's not like I wasn't, like literally this is what we had at 5 o'clock yesterday morning or 6 o'clock yesterday morning. We literally said on the call until 9:30 or 10:30, this has to breach before I ever consider getting into longs or exiting my shorts,
Yeah.
right? And then during the 9:30 to 10:30, I'm paying attention to that mid, and that's my decision point, right? This is my crucial decision point. We never, as this box developed from 9:30 to 10, we've never once, besides right here, we tested the midpoint of that 9 to 10:30 mid. But other than that, we never ever tested that mid for me to say I need to shift my bias because momentum is coming up, right? And then the 5-9 boxes, the previous hour mids and the lows told you you're in a trending market until Like even till the end of the day, there was only one using this system. There was only one. Actually, I don't. There was never one time that told you to be a buyer because you were in a trend market lower. All right. So remember, we use these 5-9 boxes to
Great.
identify if we're in a range. Right. If we're in a range, our job is to find a higher time frame probability. Right. And trade the direction of that higher time frame. We're not going to sit here and buy here and then sell here and no, we're not going to do that. We're taking this higher probability, right? At this point, it was midnight, right? So if I'm range trading, I'm shooting all 10 of my micros here. My stop is below the 5-9 box, and I'm targeting previous hour mid or the previous hour highs, right? I'm not being greedy, whatever, right? That's
Yeah.
the risk profile for that. If I'm reverse trading, if I'm doing a reversal, right, where as I'm approaching it, like I'm selling into it, I'm giving myself a cost allowance of 750 for a 50K account, 1,500 for whatever, because like I'm not gonna let myself get punked out of this reversal based off a normal price action. If I'm trend based trading, I'm using previous hour mid in that 5-9 box and the low like we just talked about, and I'm adding to the positions as you saw me do during this exercise,
Yes.
right? We have our historical data here, but as you do this, and this is why I tell you, it doesn't matter if you do time probabilities with structure probabilities and projection based probabilities and sync it with the average range distributions like I do here. It doesn't matter. Just do
No.
something and repeat it, right? Because you're going to notice, like as Costa did, as I did, right? When we get to that low of the day zone and it just blows past it, guess what? I'm shifting to this chart and now I'm incorporating the live price component of my decision making. And it's around three things: previous hour mid, 5-9 box, and where's momentum? What kind of market condition am I in? Right? I have all day to engage 10 micro contracts on the market condition. Right? And so with that being said, that's all we do over Impact Trade Group is like we know that there's edges all over these markets, right? We talked about, and I only am going to engage with the ones that we talk publicly about, right? We know that there's edge between the 1930 and 2030. We take break out of one side, the probability is for us by the end of the day to get the other side of it, right? We know that there's edge between the midnight and or the 11 o'clock, the 2300 to the 01 time frame. There's an edge on that, right? We know that there's not much retracement edge between 9 and 1600, right? So my job is to build trade systems that are successful and sync it into correct decision making, right? So that's how you use the 5-9 boxes, right?
Excellent.
I've written articles about them. I've talked about them almost every week. I've gone public on YouTube. I've done this multiple times. I will continue to do it multiple times because guess what? I don't change. Like this system, you can ask Coast. I was doing this 9 months ago. I've added a couple of things, but that's because I backtest. I don't plan on changing it, right? Because this is the highest probable setup of the day, and then my job is to align the live price component with 5-9 boxes, the previous hour mid, with it and trade towards it. Because for this to happen, it has to have a market condition, and this is how I align that market condition with these probabilities. All right,
You've
let me
al-
go through the chat. What's up, dude?
no, I was just
Oh,
saying
a lot. My bad.
you've always said that you're not trading the probabilities blindly.
No.
Uh, so it's as you say, it's about building strategies that you can fit into that, and obviously the way you just demonstrated what happened yesterday was brilliant, really excellent
Yeah,
stuff.
and that's for because like listen, I love all traders. Like I might not agree with some of their styles of trading, but it's not my job to agree with it.
No,
Like I'm not their manager. I'm not their risk department. Right? I love all traders, and I know that 90% of traders are discretionary traders. And the reason I built this 5-9 box with previous hour mid is for those discretionary traders to identify the proper market condition and to apply the proper risk profile with that market condition.
yeah,
Yes, I have plenty of systems, right? Like captain backtest was triggered right here and entered literally right here, right? If you follow the original captain backtest rules, you would have entered right here. We closed the previous 5 minute, right? Your job is to sell into the retracement of that 5 minute, right? And then ride it, and the market condition takes over from there, right?
Yeah.
I have systems that I trade specifically, and so does the pack trade group. We all have systems that we trade throughout the day around these edges that are very mechanically simplified. But like these are the two components that let me know, like, should I be taking the midnight trade? For me, I'm my own my own risk manager. I'm my own manager, right? I did not take the midnight trade yesterday. I got busy. I already saw this whole thing play out, right? And I just chose not to, right? I got lucky. Guess what? It doesn't mean that it didn't work and it couldn't have worked, right? Because there was a clear setup. But that's just part of the game, right? Like you take the trade you show up every day, and if the conditions set, you take the trade. Whether you win or lose, it doesn't matter because the compounding effect and the law of large numbers over time was set you up for
Yeah.
success.
I think with the midnight snap yesterday, depending on where you might have got your entry, you may have got your 25 handles anyway. It didn't quite work out for me, but after that, I wasn't in any going on holiday, and so I was a bit busy.
The midnight snap did lose yesterday, but it got made up for it instantly. Like the people who lost, if they took the actual distro trades that they're allowed to take, they should have cut 75% of that loss by the end of the day.
Yeah.
So they were only down like $200,
Yeah.
and they're going to make that up today.
Yeah, absolutely.
And that's the power of it, right? Like you don't have, like what Austin does is amazing, right? Because he teaches two systems, and he shows those two systems, and we're going into a little bit more advanced stuff right now with boomerangs and stuff like that. But the whole purpose of that is to teach the traders who gives a fuck about the strategy. The strategy is a byproduct of the risk profile, right? The risk profile is the most important part. How you engage your risk profile, right, is more important than the strategy itself, right? Because that's what's truly sustainable and scalable over time, right? As long as the strategy has a probability that is greater than 50%, right, you're going to be okay through time, right? How you engage with that strategy, how you build the risk profile, that's the main thing that you should be focused on.
Yeah.
And that's why I laugh at, like, I won't say that. Never mind. He's just going to start shit. All right, let me go through the questions in here because I've been ignoring the chat all morning. Good morning, good morning, good morning. Good morning to all of you guys. I see the same people showing up.
Yeah.
You guys are family. When price rejects the high, if it is trended down, do you look for a retest to take out the high, or when does this matter? That it sweeps both highs and lows. Listen, I'm pretty transparent with how I trade, right? Like, if it takes out the high and the low, right, then I'm just sitting on my hands for the next hour to see if it's in a range of market, right, or is it reversing, right? Do I have a probability of it reversing right there or within that zone? And then, like, if I do think there's going to be a reversal there, based off the time of the day, I'll sit here and be like, I can start a position, right? I'll start a position, and then the next hour will confirm if it was a proper reversal or not. All right, home early from the gym. What we got today? Also, Captain, I've checked my email and spam folder. Odonatos, I'll make sure you get that. Good morning, by the way. Morning, New York crew. A proper way to explain it, how to get into a trending market, add into a winner. Absolutely, Pippi. Good morning, good morning, good morning. Just because you have one leg at the minute, don't get snippy. Just because you have one leg at the minute, don't get snippy. Wes, I have no idea what that means. I'm guessing it was probably the high opening price.
Maybe one leg in the move and don't get snipey, you say it?
I have no idea what that means.
Gail Gordon's asking about the London OU line.
How do we? Oh, okay, cool. Yeah, it's the middle point, right? Like if I use either the 4 o'clock price, right, the 4 o'clock price, or which they usually line up together. Let me turn on that range. It doesn't show it. So if you draw, let me get rid of these boxes. I'll put these back in. Right. If you draw out the 3 to 4 o'clock range, right, it's usually that 4 o'clock price or around the midpoint of that 3 to 4. For me, midlines are important, but I'm shifting out of that because we have the hourly footprints that we talk about that have more probability. So I'm using those as like, it's just the over under line, right? Like it's telling me if we're above this line based off the London market, what side of the market should I be targeting probabilities on? Just like for the 9:30 to 10:30, the midline, should we be targeting lower targets or higher targets, right? That's all I care about. All right, let's see. Jonathan, you got to work today. Good luck with that. It's not drawing because we shorted a session.
Sam is how can he learn this method step by step? I guess show up every day.
Yeah, show up every day, watch the videos we have. We've never changed, right? We don't change the way we do this.
I think that's it on the questions.
Because remember, what I told you is more important to stick to a strategy. You know, like I don't give a fuck if the moon, you know, is a crescent moon, you're gonna draw 23% off of the opening price. As long as you stick to that, you observe, you journal the price response to that, and you build the stats for that. Stick with it, bud. Right? Like it's not hard. All right, 50% of the London range, yes. Dell. All right. Other than that, I'm gonna be done for the day, and because I gotta still knock out today's daily profiles, and because I'm behind time, I gotta do it speedy, so I don't have time to sit here and talk through it.
Okay.
All right. Later, dude. Let's jump on let's jump on a call this afternoon. Do you have time? I know you're going on vacation.
Yeah, I'll ping you.
If you can make it. If not, I'll talk to you when you get back from vacation.
Oh, we'll have opportunities. Don't worry. But I'll ping